The strategies and concepts discussed are for educational purposes only and do not represent specific investment, tax, or estate planning advice. Investing carries an inherent element of risk, and it is in everyone's best interest to consult a legal, tax, or investment professional. John Cyndia is an investment advisor representative of, and advisory services are offered through USA Financial Securities Corporation, member FINRA SIPC, a registered investment advisor. Life Stages Advisory is not affiliated with USA Financial Securities. Life Stages Advisory, Dean or Remington, or any guest we have are not affiliated with USA Financial Securities. Welcome to episode 61, WTF, Wealth, Tax, and Finances. I'm your host, John Cyndia, certified public accountant and personal financial specialist. Remember to like us, love us, register. What is that?
Like, follow, subscribe, yes. Turn on notifications.
All that
comment.
Tech stuff. Yeah. Thanks for covering.
Hey, we got our light fixed.
Light went out last episode just randomly.
The light was broken. Rem didn't notice. Everyone thought it was normal, and I
thought
stood
Dean
here.
turned it off.
So
I don't know why I would do that.
So if we were totally in the dark, like we normally are,
if you're listening on Spotify or
they
Google
probably noticed.
or iTunes, you
could
definitely noticed that the light turned off.
Yeah.
If you're watching on YouTube, you didn't see it.
That's right. Are we done?
Yes.
Thanks for that
Great
public
intro.
service announcement.
Yes, PSA.
Okay. Anyway, now that is done, the last episode we talked about fear of missing out, this melt up, everything else. Well, guess what? You need to have an access through a brokerage account in order to do all that stuff in the first place. And I wanted to talk a little bit more in detail. We'd mentioned some things briefly over the last several episodes, but what I wanted to do is give you sort of a thumbnail sketch of the different types of brokers, advisors, what else? Planners, agents, representatives, what else you could have, and what they actually do. The first thing I think what you would look at are these discount brokerages. And when you look at those, they're low fees. They're pretty well easy to access. They do have apps in there now. You'll see some of the other ones that have been in on the news lately that are so easy to get into with the apps that some people get in trouble with them. But when you look at the discount brokerage, there's a lot of day traders use those. And if you're just getting in, you want something low cost, you're going to do it all yourself. They will give you some assistance and training, usually online or through videos of how their platform is going to work. Give you some of the basics of trading and either buying a stock, selling a stock, if you're going to do some day trading. But you're going to pretty well have to go in there and understand the platform. I got into one on the side here a little bit, probably about 6-8 months ago. You can get into some major detail with the discount brokerages. They have some really nice platforms. So if you're trading or you're doing anything, even if you're doing futures, stocks, options, whatever, you've got access to a lot of stuff in there. But you really have to be a do-it-yourselfer, understand what it is that you're doing, and otherwise you're going to get into you can get in a lot of trouble with not only how you're trading or what you're trading, but the cost structure and everything else. And even though it's a discount brokerage, the more bells and whistles you want, the more you're going to pay for. Okay, so there you can get up to where you're going to be spending a few $100 or more a month, even on a discount brokerage, based on the types of software that you want to have. If you're going to have up to the minute quotes for options, if you're doing any of your day trading and you're trying to get split second trades or anything, you can do all that, but it's going to cost you more, and it's not going to be necessarily, on the discount side of the pricing. So the discount brokerage is one. The next one, Rem and I were talking about a little bit earlier, was what's a robo-advisor? You hadn't heard about that, had you?
Yeah, one of the guys that I work with, he said he was investing a bunch of money and stuff, and I'd asked him, like, long-term, what's he going to do? And He's like, well, I'm not going to go to a CPA or anything like that, because what if that guy has to go to the bathroom or something? I could lose thousands of dollars. And he's like, I might just go with this robo advisor because they're based on algorithms. And I just kind of stared at him for a while, and he just walked away. But
Yeah.
They're
Yeah.
based on algorithms.
Yeah. Yes, that's it.
Stared him down.
Yeah. And what they are based, algorithmic based. I'm surprised I got that word out. That you go on a platform and you're going to answer a bunch of questions, and based on those questions, they're going to come up with risk analysis. They may bundle different types of strategies for you. They may do a lot of different things, just depending on how in depth you want to be with that. It's going to be similar to a discount brokerage that you can also, it's going to be a do-it-yourself type of a situation that you're going online and, there again, it's probably for more of a do-it-yourselfer. If you've got the time, or you think you have the time or the knowledge to do it, then that could be, a way for you to get in there. And they start to have a little bit more than just transactional type things. You may be able to go in and do fee-based management, some things like that, at a very low, maybe 20, 30 basis point cost, as opposed to going in with a full service type of advisor that may charge anywhere from 3/4 to 2% on the types of accounts and active management you may want from someone else. So when you look at that could be another option. But there again, just like the discount brokers, they are geared toward someone who wants to do it on their own. But you can use those as platforms, and many of us do when you're utilizing that for some other types of RIAs that I'll get to in a minute here. A full service broker is mainly what you normally see with the television ads and everything, with the large wirehouses in the brokerages. Some of them will be at the banks and everything. And they have usually a Series 6 or 7, which allows them to trade in mutual funds on the 6. 7s are your stock, basically. And then they may have it in different states, so they would need Series 63. So they're looking at different types of licensing from that standpoint. They're regulated under FINRA. So if you see FINRA, SIPC, a lot of the times you'll see different notifications on brokerage statements. So FINRA does the oversight on the government side, and the SIPC, they will be over the brokerage house and side. And a lot of people think it's just the Wild West because, they're still deriving a lot of their trades from commissions, which is probably much less common now than it used to be. It was almost the brokerage side was almost exclusively driven by commissions and trades, and that's the way that these brokers ended up actually making their money. If they weren't trading stocks or buying or selling, they weren't making any money. So then that sort of grew long in the tooth, I guess, back in 80s and 90s, and then started doing some more things with assets under management and advisory. And that's where the RIA, or Registered Investment Advisor, you'll see comes from. And normally, if someone is an RIA, they are either governed by the state, and in Ohio, it's if you're under $100 million of assets under management, it'll be overseen by the Ohio Securities Department. And if it's over that, then it's the SEC, the Securities Exchange Commission, on a federal standpoint. So once you have that, because of the way that they have their fees structured, it is like an assets under management. So say you have $100,000, the broker or the advisor in this case, say may charge 1.5%. So for $1,500 a year, you're going to end up having a managed account, and that $100,000 will be able to be traded. There's no commissions on the trade. Ticket charges for the transaction are probably somewhere about could be around $8 to $16, $20, something like that. So unlike whenever you trade a stock in a brokerage account, and you might have a $100, $200, $300 commission on something for that transaction, you won't see that in this managed account. It'll come out maybe on a monthly base, could be quarterly, and at any point in time that you have any less money or you have more money, then that 1.5% will end up becoming, it could go down in price. So if you went from 100,000 to say 250, there might be a break point, and now the advisor might charge you 1.1% or 1% or whatever. So different types of tiering, depending on how much money or how much you have in your portfolios. So they could combine those and give you a break on the cost structure. You also have insurance agents. A lot of times the insurance agents, besides insurance, will have some type of a securities license. In order to sell annuities or variable annuities, you have to have a Series 6, and in conjunction with that, so there may be something that they have there on a fixed annuity basis. You just need your insurance license, but on a variable, you would need securities in order to transact that type of a sale. So once you look at that, you've got someone like myself that's a CPA. I'm also securities licensed. I'm an RIA or an IAR, which is investment advisor representative, and I go through my broker-dealer in order to transact assets under management. So I can do, as a CPA, I can charge hourly rates for tax planning. I can charge rates for being a financial planner, and we get a plan set up. I can do commissions if that's more suitable to you. We can do assets under management on a fee basis if you like that. A lot of times it's a combination of everything. So once you have a plan set up and we understand what how it's going to be set up, then we can look at it, and I usually try to get it from the standpoint that it's most cost efficient for the individual. So we usually have a combination of all of those different types of fee structures and setups. The difference is a planner is actually going to do a full plan for you, not a transaction, but it would be more of allocating, finding out your risk situation, knowing if you're going to have qualified, non-qualified money. We're going to put all this in. We're going to do a retirement plan. We'll set that up, do a lot of estate planning, tax planning. So we do a lot of different elements that are involved into that. And having the benefit of being a CPA, then I can look at both sides of this and understand exactly what the tax ramifications are going to be, where a lot of the other advisors don't have that advantage. So having the capacity to do both sides of that makes us quite a bit more efficient than some of our competitors. When you start to look at different things then based on this, I think it's important to look at what's called broker check. You go online, pull up the individual's name. They will have their what licenses they have, if there are any complaints about them, how long they've been in business, how long they've been licensed, what states they're licensed in, and like I said, the types of licenses. So it's good to do something from that standpoint. When you have a person that's in an RIA, or Registered Investment Advisor, or an IAR, like I am through the broker-dealer, that automatically attaches itself to a word that everybody's probably heard of but don't know what it is a fiduciary. So what that is when you're a fiduciary, you are supposed to have the individual that you're working with, their best interest at heart first, okay? So it's not like, geez, how much commission can I make out of this transaction? It's like, oh, I'm going to see what's the best thing that's going to help this individual attain their goals. So you do have a sort of a built-in filter that you're going to have to deal with from a moral obligation and standpoint there through this type of fiduciary capacity because of the way that you're trying to transact business. So someone like myself that is duly registered, in other words, I do under the advisory side and on the brokerage side, I have oversight, regulatory standpoint from FINRA, SIPC, also from the security standpoint on the fiduciary side. Being a CPA, I've got the ethical standpoints and I have to deal with that. So a lot of times having to make sure that all three of those are in sync is a little bit tough because some of them kind of sort of contradict, or not contradict, but have different levels of, I guess, of complexity that you have to deal with, and we got to navigate those. So it makes it difficult sometimes, but usually, we end up working it out pretty well. But there are differences in each one of those. Have you guys had any experience with any of those different types of platforms? I know you probably had more on with the app type setup, especially when we were looking at the last several months with the stocks going crazy.
I mean, we used, I don't know if we can name names for some of the apps, but...
Oh, we probably won't at this point.
Yeah.
Just from a compliance standpoint, there again, what we're talking about.
Yeah. But with the apps I've been using, it's not like I'm pumping in tons of money, but it's just borderline like beginner stuff.
Yeah.
Nothing too crazy with
What
it.
are they giving you? Do you have the capacity to go on there and learn through videos or anything on your own? Or do you have a helpline that you can call and say, hey, what's going on?
Well, the first one that I think a lot of people were using a while back that a lot of people switched off of, I don't think they offered any like education on there, but what I'm on now I'm looking at it right now, it's got an entire education center built into it, which is, it's nice. I haven't had the chance to go through and dive
still
deep
in a
into
way is self-help though.
Yeah.
You have to
yeah.
seek the knowledge. It's not just given to you.
Well, it's like some of these people when we were talking about, on Reddit and stuff, that the individuals, some of the questions they had, they shouldn't have even, they shouldn't have
How do
been
I put
let out
money
of the
in my
house,
bank
let alone.
account?
Yeah.
I don't know how to get in. How do I get in?
Yeah. You open the door of the bank, you go in and you ask them for help. But you can't put money in a bank, and I don't think they were talking with an app. They were talking
No,
about,
they meant like, how do I put cash into my bank account?
yeah,
You
have
should
to go
not be
inside the bank first, open the door, and so
How do I take my mattress savings from all my drugs and put it into the bank?
Exactly. Yeah, it's probably something like that. But yeah, when you get into some of this stuff, when I say it's going to be more of a self educated type of a platform, you really have to understand what the definitions of the words mean.
Oh yeah.
So these guys will get in and just start trading or trying to do something, and trust me, it's not going to work. I've got years of experience in this, and you're always learning something. But just how best to trade, how best to invest, how best to get the right prices. Sometimes when you're working with options, just a lot of different things that go into it. And some people want to just, get in, open an account, throw some money in and start trading. And it's just not that easy. Excuse me. When you end up wanting to do something just to do it, I can guarantee you're going to lose money. If you're doing it and you have a plan and you have a structure, you had mentioned, I think the last episode, part of the problem you had was you didn't have an exit strategy.
Yeah, that's what kind of cost me some money there. Is I was like, oh, it's just gonna keep going up and up and up, and then when it dropped, I'm like, oh, it's gonna get back up there, and then it would somewhat do it. I'm like, oh, well, I'll stay until it goes up another 200, and then it drops 5.
And that's part of what I brought up the last time, was trying to take some money and gains off the table. Nothing wrong with that. In fact, unless you're going to ride the stock market up and down like waves in the ocean, we want to get off the ride here at some point. So there again, being at all-time highs, you might want to pair some of these gains, get out See if if you're into the IRA standpoint, and you won't have any tax consequences. But we don't want to, kick up any tax liability if we don't have to. But you may want to look at some of the holdings that you have. And if there is going to be a pullback in the market, we want to make sure that, you're not going to lose all your gains and everything. So, look at that. There's a lot of the different things I think you'd be aware of or be concerned with is just making sure that an individual has proper certifications. And when you're looking at that, I'm a CPA and a PFS. You'll hear me say at the beginning of each of these episodes, certified public accountant and a personal financial specialist. The PFS is similar to the CFP, but you have to be a CPA in order to be able to sit and get the PFS designation. So there's a large hurdle there in the front that you have to be a CPA. So you got to be certified first before you can become a personal financial specialist. The CFP is another designation for financial planning, certified financial planner. You'll see sometimes the insurance agents will have CHFC. It's a chartered financial consultant. That's going to be similar to the CFP. They've got a different set of regulations and education that they'll have on there. And you'll also see a lot of insurance agents will have CLU, a chartered licensed underwriter. And that usually connotes that they do a lot of life insurance, and they will be able to, do a little bit more on the life side than some other agents may have. But at least those top 5 different certifications are probably going to be some of the more important ones to check for, just to reassure yourself that there is some type of competency there in order to have those designations and certifications. And there's an alphabet soup of tons and tons of other types of certifications, and they all are sort of derived out of those top 5, and to a lesser extent, they're a little bit more specific. So you're just dealing with strictly retirement funds, or you're dealing strictly with long-term care. So it's just one aspect. These are all broad, so we've got a very large, deep, and diversified knowledge of financial, insurance, and business type of assets that we have there. So when you look at those top 5, I would think that you do that and check the broker check and look at the insurance background off the state where they're registered. You're going to have a pretty good idea that they're going to have a pretty solid background of someone that you're dealing with. And the different states, that you're certified in, I've got 3 different states that I have between Ohio, North Carolina, and Florida. As far as my CPA, I can deal with just about every state on a small level from a tax perspective, but I have specific certifications in those 3 states that I can do, just about anything from a CPA standpoint. As far as the PFS designation, that follows from a national standpoint, and then the securities licenses are pretty much a national uniform test, but each test that you have will allow you then to have the capacity or the ability to go ahead and transact business in another state. So they will be federal tests first. They're all uniform, but then you have to have each state that you have to be designated in order to sell securities or charge assets under management or have insurance capabilities of doing something for life, health, long-term care, disability, or something like that. So there's quite a few different regulatory bodies that you have to navigate, like I said before. And then with the CPA and the PFS designation on top of that with the securities and insurance, there's a lot of regulatory stuff. So the more you have, the more ability that you can have the assurance that there is a lot of regulations that are overseeing that individual, such as myself, and that there's usually a lot of integrity and background into that, and a lot of ethical considerations, usually on a positive side, that you'll see. So you can rest assured that you're dealing with a competent individual from that standpoint. So you guys have anything else you can think of? Or
Did you just call yourself smart?
Probably.
I think you did. Yeah.
I may have done that purely not by accident. I think.
Yeah, you said you rest assured you're dealing with a competent individual.
Yeah.
Smart guy over here.
You know what that
Jeez,
means? And he just
thought
tells
I'd
us
slight-
all of these.
Look
He's
at
got,
this wise guy.
it looks like a doctor's office. He's got all of his certifications on the wall behind him.
Exactly.
Yeah, and you look at him and you go, "Those are from the '80s."
Did you see
what
that?
do you know?
Did you see that hat? Did you want that hat in this?
No.
No, we're not doing this episode.
We like the hat.
They keep giving me grief about my hats.
You can probably see it if you're on the YouTube. You can probably see it in John's shot right now.
Let's see. Let me move my head.
Maybe we'll zoom
see
in
it?
on it real
Yeah.
close. Yeah.
Anyway, they're giving me grief about my hats. I don't have any hair, so I got to wear a hat. What are you talking
It's
about?
not cold out. You're fine.
But yeah, no, going back to everything though, I think my main concern was just learning what a robo investor is, and
Mhm.
covered that. 'Cause
Cool.
I gotta have something to come back to the guy on Monday and be like, just listen to the show.
You're about to get destroyed.
That's right. That's-
Common sense, buddy.
Yeah, we will own you by the time you're done. So, anyway, well, as always, thanks for tuning in and listening. Tell your friends about us. And one more time.
Oh boy. All right. So what you're gonna want to do? You're gonna want to like the page or the channel, subscribe, share with as many people as you can. Send it to your grandma. You're gonna leave a comment. You're gonna send John an email at jcindia at
Life Stages.
I almost forgot. lifestageadvisor.com.
I'm glad we're so polished here and
If
professional.
you're listening on Spotify, go over to Apple Podcasts and
Stop it. Don't do that.
no. But if you're on Apple Podcasts, though, the two people on there, make sure you give us a 5-star review.
Or a 1-star review.
No, 5.
No, 5 would be fine.
We'll take
5
5.
will be, we only take, yeah, you guys.
Fives
we only
only.
take good reviews.
That's right.
So, yeah.
Nothing negative
Anyways.
about this. So, there again, thanks a lot. We'll see you next episode. Take care.